It's going to be attached to the property at the county records, and it's usually attached to the person. Welcome back. I'm Ted Thomas. I've been involved in tax lien certificates and tax defaulted properties as an investor and as a guide and as an author for well over 30 years. Now, I'm not an attorney and I'm not a financial advisor. So I try to give you some good inside information, but understand that I'm not giving you legal advice. So what is an IRS lien? Well, today's episode is about the Internal Revenue Service and what you're going to hear about as an IRS lien. Now, later on in the episode, I'll actually give you an example and show you how that lien can actually be removed from the property and not cost you any money. In this episode, I'm going to reveal some astonishing information. These are facts, and they'll generate large profit for the people that know how. Most people don't understand the lien process or how the IRS liens work. So I'll give you a little inside information, which I'm sure you'll find very valuable. So I'm about to show you how to take advantage of tax defaulted real estate that does have an IRS lien attached to it. Okay, it's not magic, it's just the rules and knowing the statute. Now, this process that I'm going to give you is honest, it's ethical, and it's not going to require any future payments on your part to pay the IRS. So first of all, what does this IRS acronym stand for? It stands for the Internal Revenue Service. Simply means that's federal government process by the United States, and they're just claiming their position on the property, or they're going to lien and confiscate the property. So that's what an IRS lien is all about. It's going to be attached to the property at the county records, and it's usually attached to the person. So what am I saying? It's a federal lien, it's a claim against the property, and in most cases, they'll also make the claim against an individual. All right, so this simply means that this is a lien that's going to have to be paid. Now, the property can't be sold, it can't be refinanced, nothing's going to happen on the property unless the IRS gives permission for all that, and we'll talk about those things too. Now, if the property owner neglects to pay or refuses to pay, I can assure you there's going to be consequences. And that consequence is going to be, they're going to levy. Levy means they're going to take the property. They're going to actually get a court order, and the federal lien will be at the county records, and they will take the property away from those individuals. All right, now these documents are filed against the property at the local county records. So you can do this as part of your research process. You can find liens like mortgages, deed of trust, federal tax liens, municipal liens. They're all at the county records. And so that's part of your business if you're going to buy tax defaulted property. So today I'm kind of narrowcasting to IRS liens, okay? All right, now some of these federal liens can actually be subordinated, and I don't have enough time on this particular video to talk about subordination. So the subordination does not remove the lien, but it does make the IRS lien more junior. But I'm not going to go into that. So let's just get the concept, and so we know we're okay. Now, as I say, I don't not have enough time to talk about subordination. All right. Now, the IRS lien doesn't compete with all the other liens. All the liens are put in place by date and time. Date and time is going to be very important. So I don't make the rules. The legislature of the state makes the rules regarding what's going to happen at tax defaulted auctions, okay? The federal government makes their own rules, but I can tell you, anything that has a lien on the property is going to be at the local county records. All right, so the state legislature, they make the rules, they make the restrictions, and then they push them down, and so the local county board of supervisors or county commissioners will enforce those rules, okay? So it's all done locally so everybody knows what's going on. There's over 3,000 counties in the United States, and they all auction tax defaulted property. Now, where do they start the bidding? Generally, it's 10 or 20 cents on the dollar, but the property might not sell for that. Why not? Because people bid them up. But they're starting at basically the back taxes. All right, now, why are they starting at such low prices? Well, the county treasurer has one job, and that's to bring in money. Now, the property might have a high tax assessed value, but the county treasurer will sell a lot lower than that because the county treasurer just wants to collect the back taxes. So the property could have a high tax assessed value, but that could be discounted 50, 60, 70, 80% down to the price that the treasurer wants to sell for. That motivates people to show up. All right, now there's no guarantee of the condition of the property. There's no guarantee that there isn't defects in the title. None of that takes place. The county's just auctioning the property. They're going to give you a quitclaim deed when you buy it. So, but you have to check the county records, make sure municipal liens are off the property, make sure federal liens are off the property. All right, so these are tax defaulted properties. It could be sold 10 to 20 cents on the dollar. You could then resell them yourself on Facebook, or you could use the multiple listing, or Trulia, or Zillow, or Redfin. You can use any system you want to use. You can sell the property, and you can make a profit. Now, when you make that profit, that's good profit for you, but the county's happy because they're making a property too. So you want to ask yourself, if you could buy properties at those low prices, would that work for you? And that's what tax defaulted property is all about. Buy it low, sell it below that tax assessed value, maybe buy it low and sell it low. That's what I like to do, and I like to do that relatively quickly. All right, now the local county needs money. That's why they're selling these tax defaulted properties, and they want to get that money. So that money's good for them, so they can pay the county employees. Also going to be pretty good to you, so you can take care of your family. All right, now the legislature in all 50 states is the one that mandates and authorizes tax defaulted properties. So that means all 3,000 plus counties across the United States will have tax defaulted property. All the rules are taken care of right at the local level by the county commissioners and by the Board of Supervisors. But the rules were actually made at the legislature. All right, now the commissions are authorized by those county commissioners. All right, so all of this takes place at the local level. So you're going to go to local auctions. We're going to advertise in the newspaper, and they're going to advertise on the county website. Auction properties have an assessed value. That doesn't mean it'll sell for assessed value, because the treasurer can sell for any number that they want. They just want to get the property back on the tax roll. However, the property could have a starting bid, but the bidding can go up. So it might start at 10 or 20 cents on the dollar, but it might sell for 30 or 40 cents on the dollar. So the treasurer, when they have the auction, they will cancel the deed of trust loan or the mortgage loan. So you're buying a property that won't have a deed of trust or a mortgage on the property. All right, now, if you're a problem solver, you're getting it, because you're going to have to think about municipal liens, federal liens. What are you going to do about selling the property? It's going to be your property, but all 3,000 counties are going to sell these properties. So there's going to be at least 5,000 of these auctions this year. All right, they're going to have liens attached to them. You need to understand the lien process. Everything we're talking about here is ethical and honest. However, liens will remain on the property after the auction. Could be a municipal lien or a federal lien. And we're going to show you in just a second what's going to happen to that IRS lien. So the IRS liens are on the property. But what's going to happen? Well, I'm going to show you in the next few minutes. All right, now, this is how the IRS lien leaves the property. If the county has been notified, or I should say, if the IRS has been notified by the county that they're going to have an auction, the county just simply has to notify the IRS of the auction. If that has taken place, then 120 days after the auction, the IRS lien will fall off the property. That doesn't cost you anything. So you could buy a property at auction that still has an IRS lien. If the county has notified the IRS, that lien will drop off the property. Now, the IRS has an option for 120 days to buy you out. In other words, come and pay what you paid and buy the property out from under you. So it's not a losing situation. What's my point? This is a low-risk situation, because the IRS lien is either going to buy you out or it's going to drop off the property. Now, look, I'm not an attorney. I'm not a real estate broker. I'm not a financial advisor. You can check all this with local attorneys so that you know that. I'm just giving you the inside information from a person that's been in the business for over 30 years. So I'm not an attorney, again, and I'm not a real estate broker. Many students get confused at this point. So what you need to do is you need to think about guidance. I'm a big advocate of having a coach and a mentor, because it turns out they come up with miracles like I just gave you now with an IRS lien getting off the property. I can tell you right now, if you don't have a coach, a mentor, or someone guiding you, you're making a big mistake and you're missing a big part of your education. It's my experience, when I started talking to successful people, I started making notes. And when I started making those notes, everything changed for me, okay? Now, getting in business can be very intimidating. So making a decision to have someone help you is a good decision. Now, I'm not talking about just having a coach on a full-time basis. I'm talking about having a coach that's going to guide you as you go through your tax lien indeed business and mentor you to get into a business so that you can make profits in the future. All right, now anybody can buy a tax defaulted property. The key to this business is knowing how to sell them, and people underestimate the marketing of these properties. So I want to take a minute and talk about that. Now, this simple blunder of not knowing how to sell a property makes a difference between success and failure. So if you're a buyer of tax defaulted property, you need to learn how to be a seller of tax defaulted property. Now, how are you going to do that? Well, I'm going to give you some solution. Now, most sellers fail in the business because they don't know how to sell the property. So let me give you a couple of solutions. And one of them is this: learn how to sell and use media. What's media? Media means Craigslist. It means the multiple listing system. It means using Redfin. It means using Facebook Marketplace. It means using Zillow. It means using all of the sites that are available to sell property. The people that do that, you're going to let the world know with that media that you have a property to sell, and that's going to bring people to you. So you've got to make yourself successful by using media. All right, now I've used media all the time to sell my property, and I can sell them. You need to do that. Just a simple sign on the front lawn is good, but signs all over the neighborhood is much better. All right, now people make big mistakes at these auctions. Let me tell you what the biggest mistakes are. Number one, they don't look at the property. If you don't look at the property, you don't know whether there's a fire, you don't know if they've had a flood, you don't know if there was a hurricane, or what if there's a pig farm or a chicken farm next door. You don't know any of those things. So you don't want to buy a property without boots on the ground. Now, while you have the boots on the ground, don't make mistake number two, and that's exit strategy. In order to have an exit strategy, you have to look around. You need to look when you buy that property. What are the comparables in the neighborhood? What are you going to be able to sell this property for? You don't want to bid too high. So number one, you've got to be cautious on what you're buying. Number two, you have to know what the neighborhood is. After all, you're not going to be able to change that neighborhood. You might be able to change the property. You see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. In the small population counties, dozens, hundreds of properties are available for auction. In the large population county, there's going to be hundreds, even thousands of tax auction properties available. If you'd like to know where they are and how many, go right below me and we'll provide you that information. I'm Ted Thomas. Don't forget, request your free gift right below me.